Hello everyone, thanks for joining us today and welcome to this educational presentation of the last chance to learn the secrets of a stock specialist. Now today I want to talk to you about something that we only produce once a year, at the very most twice, but it could be in a different category, and that is our new Elite Stock Trading College, okay? Now in the college, I'm going to be sharing with you some of the tips, techniques, and strategies that I've accumulated in my 41 plus year career, and things that can really shorten your learning curve and get you on that road to consistency. For example, let's take a look here at this older chart, okay? We're going to be looking at WAT. Now someone looking at this, right offhand, the way you've usually been taught, let's say you're going to some class where you look at support and resistance or what the institutions or the volume is doing, and based off what you've learned, which is mostly what everybody learns, you see that there's resistance right here, okay? The market shouldn't go any higher. Maybe that's where all the resistance is from the Fibonacci levels or maybe from the institutions. So you think that you shouldn't buy this until it goes through. But with a simple technique that I'm actually going to be sharing with you today, and that's more advanced levels of it in our college, you would have known as early as right here that you should be looking at this as a buy. So from this point on, you would have not have thought about resistance. You would have not have thought about the market being some type of a rangy environment. You would have thought that I'm going to start looking for buy setups because ultimately the stock went up 45 points. You could have taken advantage of that 45-point move to the upside. And I'm going to share with you today how you could have taken advantage of it. And this is just one of the many things that's going to be included in our college. So welcome. This promises to be a great presentation. My name is Primo, president and founder of Specialist Trading. And 9 years ago, I teamed up with Pro Trader Strategies with a goal to educate students around the world. And so far, we have students in over 115 countries and in virtually every state in the United States. So we're doing a pretty good job of spreading our word around. And someone would say, well, why do you focus so much on education? Well, it's because in my 41 years of trading, that is the one thing I have found that is missing from most traders. And it's coincidentally, that's why I believe most traders fail, is because they don't have solid fundamental education under their belt. So when you don't have the education, what's the first thing you do as a trader? You start hoping and praying that someone else, some system, some chat room, some guy on TV or some indicator, convoluted indicator is going to have all the answers for it. Because if you don't have the proper education, you're going to rely on someone or something else to make the decisions for you. And this is why most traders fail. I was taught the same way when I first started trading. I had to have tons of indicators. I had to listen to all the news events, and it didn't work then, so most likely it's not going to work now. It wasn't until I was supplied with the same fundamental education that I'm going to be teaching you in my college that's when my trading turned around, and I believe it's sustained me now for 41 years. I started out on the floor of the Pacific Stock Exchange. I was on the floor for 16 years. 9 of those years I was a specialist. That's where we get the name Specialist Trading. A specialist was just someone who made markets in about 50 or 60 stocks. So if you wanted to buy or sell a particular stock, you had to go up to the trader who specialized in that. So I made markets during the crash of '87 and the bull market that followed. So I've seen just about every system, every trading technique you can think of. If you have some brand new system that's just on the market right now, it's probably been around for a long time. If I've already traded it, I've been around in every market you can think of, a straight up, straight down market. So I know what works in terms of consistency and I know what doesn't. So why spend all your hard-earned money and especially your time trying to get to that level when I can shorten the learning curve for you? So this is what we do, especially what we're going to do in our new Elite Stock Trading College. So I'm going to share with you what's included. I'm going to share with you what my mentors taught me and some of the things that are included in this 6-week course. But before we begin, as always, we're required by law to first show you this, so please take a moment to view our disclaimer. I'm going to show you a lot of performance results, a lot of what's covered in our college, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated. And also, please remember that all examples are strictly for educational purposes only. So as you're taking a brief moment to view our disclaimer, also, if you haven't done so already, please feel free to follow us on Twitter. There's our handle right there. You may want to copy that down. I post different information on a daily basis. Hopefully it will be able to educate you and elevate your trading. So feel free to follow us on Twitter. A lot of great information posted on a daily basis. Okay, so as I stated in the opening statement, we are an educational company. We're different from most companies in that the only thing we provide is sound fundamental education and then the mentoring of that education, as you'll see in our new Elite Stock Trading College that's set to begin rather shortly. But remember, you have to be brave enough to let go of the things that aren't working for you and decide that you want to be taught by someone who's probably been there before. I know what it's like to be discouraged. I know what it's like to be frustrated. And I know what it's like to lose a lot of money. I went through the same things probably most of you are going through now or have gone through, and you're still having a tough time. And it's very, very frustrating and discouraging. You don't know how much longer you'll be able to take it. But trust me, there is a way out. It's with education and then putting you in the driver's seat so that you can make your own trading decisions. So this is our goal at Specialist Trading and Pro Trader Strategies, not to trade for you, not to sell you some $10,000, $20,000 system or classroom, which requires a lot of work where you don't really understand what's going on. We're simply trying to teach you how to trade with the specialist edge. This is the edge that was taught to me some 41 years ago. Hopefully it will be able to sustain you for 41 years going down the road. All right, now since this is going to be conducted like a class, I want to take your questions as always, but if we stop at every slide here, I have a lot of slides to share with you. I took a lot of slides of what's going to be offered. And if we stop every 5 minutes, we'll be here too long of a time. So I don't want to take all of your Wednesday afternoon. So please, if you happen to have a question, please wait till the end of class and I'll get to each and every one of them, okay? All right, so let's begin today's class. Here's what my mentors first taught me, and it was difficult to grasp, but as soon as I grasped it and as soon as I really believed in it, that's when my trading started to turn around. And one of the most important things they ever taught me was they said, Steve, the secret to trading success is a little bit different from what you may think. They may think, oh, it's having advanced information, it's studying the companies and the earnings, oh, it's having the right trading guru and then just trading what he does, mirroring their success. I said, no, you don't have to focus on any of that stuff. It's a waste of time. The secret to trading success is to never buy below the 50-period simple moving average and to never sell above it. And I said, are you kidding me? That's it? And I said, but what if I trade 10-minute bars? I said, makes no difference. I said, what if I trade weekly bars? They said, absolutely makes no difference. So let me show you what I mean. Let's look at some older charts here. Once again, we're looking at this chart where it would appear that it's gone up, but for all intents and purposes, you could say, well, Steve, this has gone up too quickly. It's overbought. It's hit some resistance right here. It's time to sell. But remember, my mentor said, don't worry about any of that stuff. Just add the 50-period moving average, all right? And so ask yourself, where is price in relation to that 50-period? Well, at this point, we have consecutive closes above. So we should only be a buyer because remember, if we're above the 50, you never want to sell, right? And look what happened, 13 points to the upside. Now, the trouble with what we're taught is that we're most of the time taught that when something is up too high to sell it and when something is down too low to buy it. But this goes against everything we were ever taught. If something is above the 50, we don't care about ever selling it. As long as it's above the 50, we are never going to be a seller. We will only be a buyer. And the odds will be in our favor to have consistent gains. How about this example in TSCO, okay? What if you said, well, we were going down and we fell out of bed, but look at this nice bounce here. We've hit some major support. The institutions and the volume picked up, and there's supposed to be some really great earnings, and plus the chat room I go to loves this stock, so I've got to buy it, right? Once again, these are the same reasons, justifications that I was taught some 41 years ago. They didn't work then, and they just about often, most of the time, don't work now. The only thing you have to do is apply the 50-period moving average. And sure, we were above the 50 until this point where we started getting consecutive closes below. And as long as we are below, you will never be a buyer. You'll only be a seller. And it would have been great had you known that because the stock fell out of bed after that. You see how the simple tool could have given you the heads up well in advance of that strong sell-off. Now remember I shared with you that stock in the beginning, WAT. How could we have taken advantage of that big 45-point gain? You know, I'm not saying you would have captured 45 points, but you would have potentially been able to. Maybe you only wanted to take 1 or 2 points, maybe 10 points, maybe 20. Well, how could we have done that? Forget about support and resistance. Don't overcomplicate your trading with these things because there's really no consistency to them. One trader's support is another trader's resistance. They're just too subjective. Forget about what the institutions are doing. Forget about the guy in the chat room or that $10,000 class. Just use this free tool that most charting platforms have. It's a 50-period moving average, okay? And I'm going to share with you how you could have known at this point, circled in green, that you should have only been buying. How would we have done that? Just apply the 50. And right here, we had consecutive closes above. 1, 2, 3, 4, 5. So that's enough to tell you that you should not be a seller. Now, had this gone straight below and had 3 to 5 closes below, well, then we would have changed our mind and said, okay, didn't work out, now we're a seller. Now, this does not mean that you buy at the market or sell at the market. The only thing it's telling you is what side to be on. Are you a buyer with a buyer's bias, or do you have a seller's bias? Now, at this point, you would have definitely had a buyer's bias, and that would have been the right thing to do. Until we closed below that 50-period moving average, you're only looking at WAT from a buyer's perspective. You can start using this today. There's absolutely nothing standing in your way. This is just one of the dozens of secrets I teach in the new Elite Stock Trading College. Let's go a little step further. What my mentors also said was, Steve, develop a methodology and then stick with it. Don't change methodologies from day to day. I'm sure many of you have gone through that, or maybe you're going through it right now. You start trading something, maybe you spent $5 grand and you're all excited. You start trading this master system. You don't really understand what it's based off of, but boy, the numbers are great. They went back 10 years and they never lost, or they made a ton of money. So you start trading it and it just doesn't work. The first trade loses, the second does. Maybe you have one winner, but then the rest of them lose. And so you know what you do? You forget about it and you start to trade something else. And then that doesn't work, so you start to trade something else. This is a major, major problem with traders, especially new people to beginning to trade, because they figure, I've got to go searching like a chicken with their head cut off. But remember, you should base a methodology off something that makes you feel comfortable and then stick with it. But most traders say, well, I don't have a methodology. The things I've been trading never work. Well, guess what? I have a great strategy for you. It's strategy number 4, and this is one of the highlighted strategies we're going to be teaching in our college. Let me share with you some of the highlights. It's for all traders, beginners to advanced. So it makes no difference if you've been trading for a short amount of time, let's say 1 week, or if you've been trading for a long amount of time, let's say 20 years. It makes no difference. Everyone gets the same basic format, and then we work out from there to mold it to your needs or your experience level. It was designed for traders looking to catch quick momentum moves, but we've devised ways for you to stay in the trade much longer if you like, weeks, months, years if you'd like. Now, its intensity level is very moderate, number 2, so it's a very comfortable way to trade. It only uses one indicator, and guess what? You already know what it is. It's the 50-period moving average. That's how simple this strategy is. The beauty of strategy 4 is that it can transfer over onto any time frame, any direction, and any market. So you don't have to worry and say, well, Steve, I trade, tick charts of Apple or Facebook. That's fine. You can use this on that. Or you say, well, Steve, I'm an investor. I only look at monthly bars. That's great. You can use strategy 4 on any market, any time frame, and in any direction. Now, if you're a member of our college, you're going to receive free automatic buy and sell indications, up and down arrows, and I'll show you that in just a few minutes. But remember, these are for educational purposes only, because I want you to be able to look at a chart and ultimately be able to spot where strategy number 4 buy or sell signal is. That's where the education comes in. Now, I've been trading this long enough to know exactly when a strategy 4 signal has been generated. So I don't need to look at the arrows anymore. I want to get you to that point as well. But in the beginning, while you're learning, we supply you with a way to check your work that provides you with the up and down arrows. Now, our edge with all of our methods is consistency. There will be losses from time to time. That's okay. As long as you have a method that's able to recoup those losses, that's what you should be looking for. It's a 2-step forward, 1-step back process. All right, so let's look at a couple of the setup rules. I'm going to be sharing with you what they are right now. I can't give them all to you, but I'm going to give you one of the setup rules here. And it's extremely simple. Look for a bar that closes in the top, bottom 25% of its range, okay? People say, that's it? I mean, it's not based off the news or not based off what the volume is. No, we're only going to look for a bar that closes in the top 25% of its range. Why? Because when a bar does that, I don't care if it's a 5-minute bar or a weekly bar, the market is telling you it wants to go higher. Do you notice what I said here? I said the market tells you it wants to go higher. I didn't say some guy who's an economics professor or some guy who's in a chat room or some convoluted indicator. It's the actual price bar. It's telling you it wants to go higher. Isn't that the thing you should be listening to? How about when you see a bar close in the bottom 25%, okay? If you take the extreme high to the extreme low, divided by 4, if you close in that bottom quarter, the market, not some guy on TV, not some institution, but the market is telling you it wants to go lower. That's all you need to listen to. You see, most of this stuff we've never been taught. We're always taught, oh, I should listen to that trading guru. He knows what he's talking about. No, I don't ask anyone to listen to me. You have to find your own way. I'm teaching you how to listen to the market. So let's look at some examples and you can see these rules in place. We already taught you about one of the rules, which is the 50-period moving average. Now you know the second rule, which is a bar closing in the top or bottom 25%. All right, so we see here in DG, this was at the end of July coming into August. Now there were 2 buy signals here. Both bars closed in the top 25%, and the software on our new platform, the PTS Primo charting platform, generated 2 buy signals. All right, so the stock goes up 6 points in the next week. How did we know? Well, because the market told us. Now, I'm not giving you all the rules. Don't think that just because we're above the 50 and we close in the top 25%, that's all you need. There are 3 more rules and requirements that need to be met. Those are what you'll learn in our college. These 2 just happen to meet all of those rules. How about QCOM? Okay, well, the stock looked like it's going sideways, but we're above the 50 and we close in the top 25%, and the rest of the requirements have been met, so a green bar is generated. That's telling you, you can decide, it's up to you if you want to go long or not. You can buy calls, you can buy the stock. It's entirely up to you. You can sell the puts, whatever you want to do. But this stock is telling you it wants to go higher. It goes up 7 points in the next week or so, all right? Now, in the college, we will provide you with exit points. We provide you with stop placement. We also provide you with different ways to enter. Remember, we are an educational company. Our job is to furnish you with that, work with you, and then you decide, excuse me, how you want to enter. You want to enter at with a limit? You want to enter at market? Would you like to enter at a different price level? Would you like to place your stop with the most risk possible or the least risk possible? Would you like to take a quick profit, or would you like to get out unchanged? Would you like to track the stock? Would you like to get as many points as possible? See, these are all different variables that we present, and then it's up to you to decide. This is how you become a consistent trader, not by listening to someone tell you what to do, which is what the entire industry is based on. Think of every chat room. Everyone says, well, you should buy this here, and if it gets to this level, then you sell and place your stop here. That's why most traders fail, because that type of teaching doesn't work. I was taught the same way 41 years ago, and it didn't work for me then. So we're trying to give you all the variables of consistency, and then you can decide. So you could have taken 7 points here, or maybe you could have taken 1 point and gotten out. It's entirely up to you. There's no right or wrong way to trade. The only wrong way to trade is when you're listening to someone or something else tell you how to trade. And we don't do that. That's not our philosophy at Pro Trader Strategies and Specialist Trading. How about the downside? Well, INTC here at the end of July looked as if it was going sideways, but we were below the 50-period moving average, and we closed in the bottom 25%, so a sell signal was generated. And in the next 3 or 4 days, the stock fell 6 points. Now, obviously, some news came out where it dropped out of bed here. We didn't know that. We had no idea. The only thing we knew was that the market was telling us at this point it wanted to go lower. AMT, all right, this was at the end of last week of July. This generated a cluster of buy signals. Now, this is something you might see a while. This is a very strong and high consistency pattern. If you see a cluster without anything happening, oftentimes, not guaranteed, but oftentimes, that will preclude a large move. And the stock went up 10 points in the next week. You could have taken advantage of 10 points to the upside. This was an AMT. Here's another example in MEDP. This was in the middle of July here. On all appearances, it looks as if the stock is absolutely doing nothing, going sideways. But we closed in the top portion of its range. We're above the 50, and the requirements of the remaining 3 rules were met. So the strategy generated a buy signal. 20 points in the next 2 weeks, okay? Some news came out here at the end of July. Did we have any idea about this news? No, because we don't follow news. We only listen to what the stock is telling us. Now, if you want to follow news, that's fine, but it's not required. The stock told us in advance it wanted to go higher. Now, you could have exited with maybe a 5-point gain, maybe a 10-point, or taken advantage of the 20. That's your choice. That's how you become a consistent trader, by you making the decision, not me. Now, NOC, once again, we're at the middle to end of July, and we have two bars that closed in the bottom 25%. After the first sell was generated, nothing really happened for the next 4 days. If you had a tight enough stop, maybe you were stopped out. So this is what we mean by a consistent method. So if you decided to use a very small risk range in your stop placement, perhaps you would have been stopped out with this trade. But let's say you got stopped out. Well, the market gave you another chance to get in, and 30 points in 3 days. So do you think, when we say our methods are consistent, you think this could have helped you? Because see, we're not saying that every trade's a winner. Sometimes you will have a small loss, but you could have easily made back that loss if you waited for the next signal, and more on top of that. Now, let's go on to some more lessons that my mentors taught me. They said, Steve, you don't need to be a weatherman to see which way the wind is blowing. So many students of mine come and say, well, Steve, what I do is I like to look at earnings, and then when I look at earnings, I go and decide what the stock is doing financially, who the CEO is, and the products they're making. And then after that, I go on the message boards to see what a lot of students are saying about it, or people are saying about it. And then I'll go into chat rooms to see what people say, and then I'll put a bunch of indicators to find out how the stock is. This is just ridiculous. Unfortunately, this is the way I used to trade. When I first started trading, I was taught that's the way you become a successful trader. And once again, we've all been taught that, but there's no consistency in that. So my mentor said, Steve, you're overcomplicating your trading way too much. You don't need to be a weatherman to see which way the wind is blowing. So I said, well, how do I know what the stock's going to do? Well, one way was strategy number 4. Another way is with strategy number 8. This is a unique strategy because it's specifically designed for stock. Now, you can apply it to other markets and other time frames, but it works the best on daily and weekly bars for stocks only. So that's why we're only including this in our college. Some of the highlights is it's designed to pinpoint strong stock moves. So many times, not guaranteed, but many times, when it generates a signal, it will generate a signal well in advance of a big move. All right. Once again, it's a very moderate intensity level, a very moderate number 2. It's indicator based. So this is a little bit different from strategy 4, where it relies on indicators. Strategy 4 relied on a pattern and requirement of patterns. Strategy 8 is based off of an indicator and its relationship to another indicator. And then it has a dynamic exit. We're using an indicator to tell us when to get out. Once again, if you're a member of our college, you're going to receive automatic buy and sell indications, but you will know exactly how to look for this setup. So it's not going to be a black box. Nothing is a black box. We're an educational company, so we want you to understand what you're trading. As with all of our methods, we always ask our students to paper trade first because there is a certain consistency level to everything. You will have small losses, but consistency is what makes for a good strategy. So let me show you some strategy 8 examples that happened recently. Here we have another cluster in Tiffany. This was in mid-July, and nothing much happened. We had a buy here, another buy here, and then still another buy here. Now, oftentimes, as we stated, but not guaranteed, but oftentimes, if you get a cluster like this, especially with strategy number 8, that's representing the stock just coiling for a big move. And as you can see, it went up 8 points after that, okay? It's up to you to decide how you wanted to trade it. Would you want to buy the stock, buy calls, some type of spread strategy? It's up to you entirely. Or if you didn't want to trade it at all. How about VRSN, okay? Now here's just a signal that was generated at the very beginning of July, okay? And as we can see, the stock went up 19 points coming into the end of July. Now, it's up to you to decide where you wanted to exit. We give you variable exits. And after we got up to a 19-point gain, then we had a sell-off, okay? Someone here would say, well, I guess the run's over. Time to short this. I think it's coming all the way back down. Okay, Steve, you were lucky with that, but this one's about to come back lower, right? Well, all the requirements are still being met for a strategy number 8 signal because another one was generated in the first week of August. Had you taken that, well, guess what? Another 6 points. So you could potentially have captured upwards of 25 points with these two signals. How about win? Here we have another cluster of 4 signals. Now, these first 2 signals may not have worked for you, may have been stopped out. Once again, this is what we mean by consistency. Don't give up. This is the way most traders say, well, those first 2 trades didn't work for me. Forget it. I'm going to move on to another strategy. This stuff doesn't work. But our methods are very consistent. If you have the faith to keep with them, if you have some more signals being generated and you're within your risk parameters, you could have captured 17 points. So hopefully you would have been able to make back what you lost and then make some more. Facebook, okay, this was in July. What did we have? We had another cluster of buy signals. The first one may have not have worked out. As you can see here, if you would have purchased it, you most likely would have been stopped out with a small loss. But then you had a cluster of 2 days after each other telling you to get back in. Had you taken advantage of that, 20 points to the upside where you could have taken advantage of that, okay? And we all know what happened to Facebook when some terrible information and news came out about it and it gapped down tremendously. Well, our exit levels that it's up to you to decide could have gotten you out if you had elected to get out before that. Let's look at another cluster here in Costco. A buy here at the beginning of July, 2 buys at the beginning of July, and the stock went up 16 points, okay? Lastly, we're looking at GE here. Now, looking at this daily chart from August of 2017 coming into May of 2018, looking at this, this has just been a train wreck, straight down. This, unfortunately, is the way most traders or investors will trade. They'll pick levels and say, well, we can't go any lower, right? This is pretty major support, and then it goes lower. And they say, well, you know, it's got to hold right here, and then it goes lower. And they say, well, this is the major support. Look at all the institutions that are keeping this up. I've got to buy it again, and it goes lower. All right? It's much easier to be in sync with the overall trend and to trade our strategies in sync. Had you taken the very first signal to go short on GE rather than buy it the way most people were saying that you've got to take advantage of these low prices, you would have been selling it and 15 points coming into May of this year. Another thing that is extremely important in all of our methods and techniques is the trend. My mentors taught me that the trend will give you direction on your path. So because of that, we will never trade out of sync with whatever trend we are trading. In other words, if you want to trade the overall trend or if you want to trade the short-term trend, we will always be in sync. Unfortunately, we're always taught the opposite. If something goes up way too quickly, too fast, we want to short it, right? Or sell it, get out of it. Or the opposite. If something comes down way too quickly, if it's just tremendously oversold, we've never been at these low levels before, you have to buy it, right? Well, remember GE? Remember the example I just shared with you? You always want to be in sync with the trend. Don't swim against the current. You always want to swim downstream, not upstream. That's how you become a consistent trader. Now, we have probably one of our most powerful tools for capturing the short-term trend. And that, as we see here, is how you're going to remedy a situation like this. As we see, most traders will say, well, the trend is up, Steve, so I've got to buy, right? And then this happens. And then they say, boy, you know, I have no idea how to be in sync with the market. Well, this tool is so powerful, it could have gotten you in long way down here and then out well in advance before the market fell out of bed. And that tool is the PET-D. You've heard me speak about it before. I use it on a daily basis. Almost on a daily basis, I'm finding new ways to use it, either from accounts that our students have given me to ways in which I use it myself. It's that great of a tool. What exactly is it? Well, it's a roadmap for any market, any direction, in any time frame. But as you see here, I didn't say it's a strategy. It's not a strategy. It is a roadmap. In other words, a finely tuned directional tool that will tell you the short-term trend. So we designed it to make it a proprietary color bar algorithm, and it's proprietary. We're keeping the formula in-house. But the beauty of the PET-D is not knowing the formula and how to figure it out. The beauty of the PET-D and the secret of the PET-D is knowing how to trade it. If you ever look at the message boards, I laugh every once in a while. I'll check them out, and people think they figured out the PET-D, and they say, oh, I've got Primo's PET-D figured out. It's based off of a 13-period moving average, crossover of the 50, and I go, oh, this is silly. It's not even based off a moving average. but they think they have it figured out. Even if they were able to figure out, which I haven't found anyone that's done it yet, it wouldn't matter because they'd most likely lose money because they would implement it incorrectly. They would think it's a trading strategy or a method, okay? It is a finely tuned short-term directional tool. As you see here, remember we would have looked at this chart in Aetna, and most likely traders decide at this point to get in because you're in the uptrend, and this is what happens. But once you click on the PET D on our PET D Primo charting platform, you would have seen that the bars changed green well in advance and then changed red well in advance of the sell-off. So this is the beauty of this. The PET D tells you which direction you should be trading. And once you know the short-term trend, which is what the PET D does, you can apply it to any strategy in that direction. Let's look at some older charts here, and then I'll show you some current ones. Here's an older chart, McDonald's. Obviously, this stock has been going up. Most people know by this time that while we gapped up here, we're in an uptrend. But wouldn't you have liked to have known well in advance that you were in an uptrend back here so you could have started applying some type of strategy in that direction? Well, if you put on the PET D, you would have seen the bars were green well in advance of this major upward move. Same thing with IBM to the downside, all right? Most traders were buying all the way down here. Wouldn't you have liked to know in advance, in hindsight, to see that, well, gosh, I wish I would have been selling instead of buying? Well, you could have with the PET D. You would simply click on the PET D in our upper green strategy tab, and the colors automatically change. If they are red, you know you're in a downtrend. And remember, we never want to swim upstream. We always want to be selling in the downtrend. So you could be applying any strategy, any technique to that downward move in IBM instead of buying it. How about PayPal, PYPL, okay? Obviously, at this point, you think, okay, we're going higher. Boy, I wish I would have known that. Well, had you applied the PET D, you would have known right here, 3 to 5 consecutive up bars that were going higher well in advance of this gap up and well in advance of this strong upward move. Now, these were last year, this GWW. Look at this straight down move. At this point, this is where a trader said, wait a minute, look how oversold we are. I have to buy it, right? Well, if you'd applied the PET D, you would have known well in advance of with these red bars that you should never have been even considering buying this. You should only be looking at a GYY as a sell. Now let's look at something more current. Those were older charts. Let's look at something that happened this last month in ENDP. All right, once again, in hindsight, someone would say, well, yeah, Steve, sure, this is in an uptrend now. We gapped up this first week of August, but how would I have known that? Well, obviously, we don't know how high something will go. That's not what the PET D does. It just tells you at the moment what the market wants to do. And well in advance, in May, it was telling you it wanted to go higher. So all you had to do was apply a strategy. It could have been one of yours, one of mine. It could be one of the many techniques we teach you in the course, and you could have taken advantage of this upward move. Now that was recently, and what about something like this in letter X, okay? Someone looking at this would say, well, Steve, how are you going to know the short-term trend here? This thing's going down, it goes back up, then it goes back down. And this is coming into this last week in August here. Well, you click on the PET D, and look how the PET D can tell you in advance when a trend is changing. At this point right here, you would have known you were going higher, and at this point right here, you would have known you were going lower. But remember, the PET D is not a strategy. It's not a system. It's simply telling you which side of the market you should be on. Now, one of the beauties of the PET D is that you can use it as a long-term trending tool as well. Here's a monthly chart of the spiders. That's the ETF that represents the S&P 500. This is going back roughly almost 20 years, about 18, 19 years. And we can see all the fluctuations in the S&P. This is the dot-com crash of 2000. And for 3 years, we were in a bear market. And then we bounced all the way back up, right back up to those old highs. And then remember the housing crisis, the financial crisis of 2008? That was right here, all right? And then since 2009, we've been going back up, making tremendous highs. What happens if we would have applied the PET D? Well, look how the PET D caught these changes well in advance of the market bottoming out and then well in advance of the market topping out. You could have taken advantage of this. In fact, in the course, I'm going to teach you a technique where you would have found out right here that it was time to buy and get back in the market, and you would still be in the market, okay? and we are still in the market, and even if we had a red bar, as you can see here, we were having a splash of red bars all along the way, you still would not have exited this market. So wouldn't you like to know what that technique is? Well, I'll teach you that, because if we do go into some bear market, after all, I've shown you 2 bear markets here in the last 18 years, but we haven't had one for a good 10 years. Odds are we're going to get one pretty soon. Wouldn't you like to know in advance the way the Pet D kept you out of all of this, how it may be keeping you out of one that eventually is going to come? That will be taught to you in the new Elite Stock Trading College. Remember, in order to learn how to trade, you must first want to be taught. You can't get wet without jumping in the water. You have to get yourself wet. There's no way to do that without sticking a toe in. It's the same way with learning how to trade. You have to take that leap of faith and become a student. So this is what we're going to be offering in our new Elite Stock Trading College, okay? Here's the curriculum. It's 6 weeks of jam-packed information that's taken me 41 years to accumulate that I'll be teaching you on a weekly basis. Week 1, we're going to be talking about the foundation and building blocks of stock trading. Week 2, we kick it up a notch and we start talking about strategy number 4. You get all the rules, all the entries, exits, and stop placement. In week 3 of our live class, we're going to strategy number 8, the strategy that's just designed for stock trading, and you'll learn exactly how to apply that. In week number 4, we're going to talk about the Pet D, all the different ways to apply it to stock trading, and then all the different ways to use it as a trading technique. There's 1,000,001 ways to use it, and you're going to learn all of them in week number 4. In week number 5, you're going to have our first option trading class. Okay, we're going to have this with Eric Wilkinson. He's been speaking for PTS, for Pro Trader Strategies, for a while. He's a great option trader, used to work on the floor of the option pit, and so you'll be learning the ways in which to apply options to these different methods that I'm teaching you. And then finally, in week number 6, we're going to be talking about advanced trade management. This is something we only teach to our college course members. This is not a separate course that we've ever taught. It's only in our colleges, and then we'll put it all together with any final questions that you may have, okay? This is 6 weeks of jam-packed information that I've accumulated in over 40 years that you'll be able to absorb in 6 weeks. Now, these strategies work great with stocks, all right? They're great for stocks, but guess what? I know we have a lot of members that say, well, Steve, I also like to trade other markets. I trade currency pairs, I trade futures, I trade ETFs. Well, you can apply them to those markets as well. For example, this is strategy number 4 as applied to an hourly chart of the E-mini futures. You think that could have helped you? There's some great setups here. You think you could have taken advantage of them? How about strategy number 4 applied to the euro dollar, okay? 2 great sell signals that you could have taken advantage with on the euro dollar using the same rules that I teach you for stocks. Strategy number 4 can also be applied for ETFs. This was a great buy signal in June coming into July of this year for the QQQs. Remember the Bitcoin, okay? I know a lot of people don't trade that now, but just to share with you how well these techniques can be applied, strategy 8 generated tremendous signals in Bitcoin when it was having its meteoric rise there. So it makes no difference what time frame, what direction, or what market. Now, if you go to my website or to Pro Trader Strategy website, you'll see a number of testimonials from past members and students that took our courses, anywhere from people that had just started to trade to this example here from someone who was a hedge fund trader, okay? So it makes no difference your experience level or how long you've been trading or your knowledge level. Everyone gets the same information, and then we work out from there. So let's recap before we go to a great offer and take your questions. Remember what my mentors taught me. In order to be a successful trader, successful trading makes sure that you are non-subjective, okay? You should be non-subjective. What does that mean? Well, too many traders jump into a trade thinking, well, okay, I kind of have an idea here. I'm kind of coming with a leap of faith, and I think that the market should be going up, so I'll buy this. There's too much discretion involved, all right? 2 traders should look at the same chart and come up with the same answer as to whether you should be buying or selling. When you have the 50-period moving average, you automatically know if you have a buyer's bias or a seller's bias. There's no subjectivity. But unfortunately, you can see 2 traders and they can come up with entirely different answers. So it should be non-subjective, very black and white. Successful trading should also be consistent. Consistency means that you will actually have losses. That's okay. What you want to have is a method that's able to recoup those losses with a two-step forward, one-step back approach. We showed you that in a few of the examples that there were losses, but usually the next signal was able to recoup those losses. All right? On top of that, successful trading should be as simple as possible. Remember, I shared with you 2 of the rules to strategy number 4. It only had 3 more rules. Unfortunately, I couldn't give you the rules to strategy number 8, but they're just as simple. And trading should be as simple as possible. Something that doesn't require a lot of work, doesn't have tons of convoluted indicators, doesn't have a lot of subjectivity and discretion involved. It's just very cut and dry. And lastly, and most importantly, trading, in order to be successful at trading, it should make you a part of the process. In other words, you never, ever want to rely on someone telling you how to trade, what to do. Unfortunately, this is the way the entire industry is based on. You go to a chat room, you buy a system, you watch TV, you listen to the earnings. If the earnings are good, I'm a buyer. If the earnings are bad, I guess I sell. Or whatever this guy says in the chat room, I want to copy him because he knows what he's doing. Or the system has 20 years of back-tested research. They know what they're talking about. It's generated gains, thousands of %. I don't know what it's based off of, but I'm going to do whatever it says. That's the way most traders trade. And guess what? When you trade that way, what you're telling the stock market is, I don't know what to do, so you can do it for me. And that's a terrible way to get involved with anything that's using your hard-earned money. You should be a part of the process, okay? You don't want to be like a brain surgeon coming into the operating room and saying, okay, tell me what to do. How do we operate on this patient? Where should I begin? But that's the way 99.9% of traders trade. They always take their cue from some blog or someone on TV or some earnings report or some indicator. You should be a part of the process. This is the only way, in my opinion, how you will become a consistent trader. And guess what? The new Elite Stock Trading College is designed to make you a part of the process. We teach you everything so that you can make your own decisions. Now, here's today's last chance, a 10T discount, because the course is going to start very soon. We're going to offer you instant access to our new Elite Stock Trading College. That's 6 weeks of detailed instruction, 2 proprietary strategies. You're going to learn everything, all the entries, stop placement. You're also going to get the Pet D. You're also going to be included in that option trading class with Eric Wilkinson. You're going to get our advanced trade management, a great technique and tool that I use on a daily basis that we only have in our colleges. And you're going to get mentoring correspondence. But we're not just stopping there with instant access. We're going to give you 12 months of the PTS Primo charting platform free. All right? This is only for new Elite Stock Trading College members. This is going to be included in your purchase. So you're going to be getting the platform, which is specifically designed to make it as simple as possible. Everything is one click away. You don't have to edit any of the indicators. You don't have to search and find out how to upload a tool onto your platform. It's all right there for you. And let me show you one of the greatest perks of being a member of our new PTS Primo charting platform. You're going to get our scanner. Now, our nightly scanner, you can scan for any of the strategies we're going to be teaching you. You can scan for the buy-sell line. You can scan for the Pet D and a number of other techniques. And it takes probably less than a minute to scan for hundreds, if not thousands, of setups. Had you been able to scan using our scanners, you can see here, these are older buy signals and sell signals. Here's something that would have been generated just this past week. Okay? As we see here, very first week in August, we have 1 or 3 or 4 bars above the 50-period moving average. Even though we opened below, we closed above. Now, we're looking at strategy number 4. Now, the scanner generated a buy signal on the 2nd of August in TPR. Okay? Now, according to what I've taught you, you could take that if you wanted to, but using the Pet D, one of the best techniques for the Pet D is to apply it and see if the Pet D colors that signal bar green. That's what we call our dynamic duo. When the Pet D and the strategy are in sync together, you have a high probability setup. So, all you would have to do is click on the Pet D, and the colors will automatically change. Now, what color are these bars? Most especially the setup bar. Well, its outline is red. So the Pet D is telling you the short-term trend is still down. I would most likely not take this setup because it's a low probability setup. So see, you would have scanned for it, checked it out with a pet D, using this is just one of the many techniques that we teach you in the class, and said, you know what, I'm not going to take that trade. And look what happened in the next week or so. Most likely you would have been stopped out. If you had a very tight stop, if you had small risk, you could see here that you would have been stopped out. Let's say you had a large risk on this, you decided to take more risk. Well, you're sitting for 3 days kind of hoping and praying that it doesn't go down any lower. And that's not a good feeling to have when you go to bed at night wondering if your trade's going to work out and you're holding a position for 3 days and your money's tied up. So it would have been the best thing not to get involved in this. And look what happened on the 8th. Another buy signal was generated. This time, the pet D colors it green. So the dynamic duo is telling you this is a high probability setup. It would have been best to not take the first one and now get into this one. And had you done that, well, the stock went up 7 points in the next week. In fact, yesterday it gapped up tremendously. This could have happened last week had you become a member of our college, and you could have taken advantage of that had we started the classes already. So we're not cherry picking. We're not showing you stuff that happened 6 months ago the way so many other classes do. This happened 7 days ago, and you could have taken advantage of this, and there's lots more that are going to be generated in the future. I'm not going to guarantee that you'll make profits like this on every trade, but there's always going to be setups, and you will decide if you want to take advantage of them or not. This is what we instill in all of our students, the confidence to make their own decisions. Remember, a year from today, you will have wished you became a member of this course. Will you be able to hold out for another year? Are you happy with your trading right now? Is it anywhere near where you thought it would be at the beginning of the year? Why don't you, invest in yourself? Take your trading to the next level. Become a student of mine and a member of our new elite stock trading college. We have a great offer for you today. The class usually runs for $49.95, okay? That's a great offer in and of itself with the pet D, but we're not going to charge you that. We're going to drop the price down for our last chance price of $44.95. That comes with 1 year of the platform, but we realize that not everyone can come up with $44.95, so don't worry. There are payment plans available. You can contact Pro Trader Strategies and they will come up with a payment plan for you. So for a small deposit, you can still be up and running in the first week of the class. This is a great offer, a great way to get situated, and a great way to take your trading to the next level by becoming a student of mine. So here's how to take advantage of this. Contact Pro Trader Strategies. I would suggest calling them at the number provided here, area code 310-598-6677. There's absolutely no obligation, but the trading consultants that are online right now are manning the phone lines. They can give you different options for a payment plan. They can work with you so that you'll be able, with a small deposit, to be in the first class, okay? Now, if you're interested in more information, that link you see at the bottom is where you would go to get more information about the class. But remember, we're going to be starting very shortly, so I would not sit on this great offer. If you look in the chat box, they've posted a live link, and you can click that on, and we'll take you to the information page. Now, I stated at the very end I would reserve the last 5 or 10 minutes for questions. So let me just open this up if you have any questions right now. I see that some people didn't have any sound. Many times, if you don't have any sound, it's usually your internet connection. But don't worry, if you were having problems with seeing or hearing anything in today's presentation, we will provide you all with a link to the recording. The only caveat is, a lot of students, once they get the recording, they'll say, oh, okay, well, let me think about it for a couple of weeks. And by that time, it would most likely be over, this deal, and you'll have to pay the full price or maybe even more. So I would strongly suggest, listening to the video, but making a decision quickly because the classes are set to begin most likely within the next couple of weeks or so, okay? And they are filling, the classes are filling up nicely. So once we get to a certain point, we don't want to have any more students because we want to keep them at a certain level. We want to keep it pretty intimate. I used to in the beginning have classes where we'd have 50 or 60 people, but it was very difficult to keep tabs to make sure everyone understood, and it was very difficult to monitor everyone's questions. So I would rather keep the classes to anywhere, 20 or 30 people. That's a much better way to teach a small, intimate class, okay? Question, does the PTS Primo platform work on Thinkorswim? No, see, the platform is separate in and of itself of any other platform, so you don't need to worry about it. Now, you can still be using Thinkorswim, but the platform has all the strategies, all the methods, all the different ways to trade. It's already pre-defaulted, so there's nothing you have to do. So if you want to use Thinkorswim to actually trade with, sure you're able to do this. This is not a trading platform, but it is a educational platform where all the signals, strategies, all the PET D, different settings, all the different ways in which to apply it are all there. So it's a great way to make things simple. And then once you get the information, the scanner, all of that, all the different scans, all the different ways to look at the PET D, then you can apply it to Thinkorswim. Okay? Good question, but remember, we're separate from that because we wanted to keep everything in-house to make it simple. One of the first things we started doing was applying all of our strategies for all the different platforms, and it got too complicated, and people didn't know how to upload the key for the different platforms, and their tech support didn't understand it. It just was, it opened up a can of worms. It's so much simpler now. We have a great tech support as well. People are asking about our tech support. We have a great tech support department. If there's any issues, they'll be resolved in a matter of moments. People are asking about, let's see, what about the scanner? Can we scan anything? This is a great question. We provide you with different symbol lists. So in other words, let's say you want to look at stocks. You'll get the entire S&P, the NASDAQ. You can also look at currency pairs. You can scan for currency pairs. You can also scan for futures. All right. You can also scan for Bitcoin. You can, there's tons for ETFs or for the hottest stocks. There's a lot of great things. On top of that, you can make your own basket. So let's say you like to look at 10 or 20 of your particular stocks. Let's say FANG stocks, Facebook, Amazon, Netflix, Google. You can look at that and scan for those on a nightly basis, and those will be the only ones. So we make it so simple, and our tech support can put that together for you, show you exactly how to do it. So these are all ways to just look at all of our information, tremendously simple, and make it easy for you, okay? All right, great questions. As we close here, remember, I just want to ask you a question. Are you anywhere near where you thought your trading would be in the beginning of the year? I know as traders, we always make these big, lofty goals and promises to ourselves that this is going to be the year that we go on that dream vacation with the money we made, or this is going to be the year that we have an extra income coming in, so maybe we can have that addition to our house or something. This is going to be the year where my trading really takes off. And just like anything, probably only about 5% of traders are able to reach a higher level. It's because we're relying on the same broken stuff. There's no consistency to it. And my goal is to take your trading to the next level by sharing with you things that have stood the test of time. So why not come on board? All right, remember, we make it easy with our platform, a full year's use of the platform. Also, we make it easy with the strategies. And lastly, we make it easy with the payment plans. If you can't come up with a large sum, we understand that. You can put a small deposit and you can still be up and running and in the first class. So please, do yourself a favor. Becoming a student of mine doesn't mean that it ends after 6 weeks. You're still a student of mine for life. You can always contact me via email, okay? So once the course ends, you can still stay in touch with me and ask me any question you'd like. So this is a great offer. You've seen our attention to detail, how we really just want to educate you as a student of ours and take your trading to the next level. So please contact Pro Trader Strategies. There's no obligation, but if you're interested, take advantage of this great offer right now, okay? So as we close here, I just want to say thanks for joining us as you take one last look at our disclaimer. And most importantly, I look forward to all of you becoming students of mine in the new stock market college, our elite stock market college. Thank you so much. I'll see you next time. Bye-bye.